Good morning, Jags. This is Fahad. Today is Tuesday, December 29th. Let's get started. The light calendar week continues, the light volume calendar week continues, but there are still opportunities out there to be mindful of. So the one that I'm looking at this morning is Fulgen Genetics. A lot of JAG clients are already positioned in this one, as we have covered this many times in webinars and chat rooms. This stock is going to potentially break out today, tomorrow, rather pretty soon. So keep an eye on this one. So multiple times, technically, this thing has come up to $50, $51 per share and then pulled back, as you can see in the past 5 months or so. Closed at 46.75 yesterday. And if you look at pre-market, this is trending higher. It is trading near $49 per share. So once again, this is the daily scale, and the stock is touching almost $50 per share in pre-market. So it's up about 5 to 6%. The reason for that is that we have a brand new news that just came out about half hour ago. And this one is that Fulgen Genetics is extending its partnership with the New York City to provide COVID-19 tested for all schools, the entire state of New York, for the year 2021. Now, they already had this contract in place before too, so this is not something new, but it seems to me that they are now exclusive partner, and this was after rigorous testing. This is after a significant amount of due diligence as the state did to pick one company that they wanted to go for the entire year 2021. And looks like Fulgent won that contract. So this seals the deal. Also, what it does is that there have been concerns in the past in some analyst community that a lot of the revenues that the company has enjoyed by providing these tests were one-off events that were not repetitive in nature. But this would seems to clear that confusion, because now they're going to have the full contract for next year. And I really believe that unless COVID completely goes away, a lot of these revenues will continue to come in a recurring fashion from all of these major contracts. Now, this could also be setting a precursor for Fulgent to get even more contracts from other school systems where they already have a big presence, such as Miami, Houston, Chicago, and some other areas where we have seen positive news flow in the past. So this is a pretty sizable sizable contract, so something to watch. The press release says, through this agreement, Fulgen will provide COVID-19 testing for thousands of students and employees at many K-12 schools at the New York City on a daily basis. Now, understand that each of these tests cost about $120. So thousands of students and employees every day. Each test costs 120. You can do the math, rough math at least. We do not know exactly how big significant this opportunity is. So one to watch, FLGT. It's going to attack $50 resistance today. See if it breaks out from that. Looking at call options in this one, this doesn't have weekly call options, but some of these January and February calls, the short-term at-the-money calls, could be in the move today, at the 50 strike line, particularly if it starts to break out. So keep an eye on all of that. Second stock, real quick, I want to discuss is Amazon. Just a high level view over here, because this was a focus of our discussion yesterday in the chat room. Fabulous, fabulous, very high volume rally in Amazon today. As the normal saying goes, the bigger the base, the higher in space, right? So this is a 6-month consolidation in Amazon, and it seems to be breaking out from this tightening wedge as we end the year. So this is a clean breakout. And looking at pre-market, Amazon is guided higher again by another $20. Now, the thing is that $100, $200 move for this stock is really nothing, because this is a $3,000 stock. So you're talking on a percentage basis, a very small move. If a total breakout leads to a 5 to 10% rally off the 3,200 level base, which was right here, a 5% rally, cumulatively, concluding yesterday's rally at a 3,200 level, would puts this stock around 3,500 level. So we're talking around here. A 7% rally or 8% rally would send this stock to a new 52-week high, essentially. So again, very small moves are needed for this to basically continue to power higher and go all the way back to new 52-week high. So what I want to see is, because yesterday there was a lot of froth coming out on a lot of SaaS stocks, we discussed this, the market internals continued to roll over, and we saw more deterioration underneath. But hey, if they're going after the big cap tech names, and Amazon is the one that is supporting the top line, the total performance in the S&P and the Nasdaq level, then there's money to be made over there. So I want to see if we're going to see some decent follow through from this, and if this is heading towards $3,500 per share or not. So just two high level view: Amazon and Fulgent Genetics. That's it from me. Jay. Jay, are you there? Did we lose Jay? We may have lost him. Chronicle, are you there?
Yep, I'm here.
All right, let's go.
Sure. So today I have a preview of what's in the works for JaguarMedia. So the next video is going to be a bullish thematic trade idea for a company called Arcosa, symbol ACA. We'll see if we can get it out before New Year's Day, but if not, then it'll be ready next week. I wanted to bring this stock to attention this morning because the chart has been trading in a tight range for almost 2 months now, and it could break higher anytime. So keep an eye on this one in the meantime. But just to give a preview of the overarching theme behind this idea, basically I'm starting to get more selective going forward about what kind of infrastructure stocks I want to own. Like with regards to the Buy America, Build America theme, the last several months have been pretty easy in the sense that we could have picked any infrastructure or construction stock and they would have all rallied in sympathy with each other, regardless of our stock picking skills. But I think those sorts of broad-based, Midas touch days are likely to come to an end soon. And as we approach Biden's first 100 days, I think we're going to have to start becoming more careful about what sort of infrastructure we want to be bullish, because not every company is going to benefit equally from his eventual policies. Now, coming back to Arcosa, what I'm trying to do with this long idea is to spread our eggs in several baskets, just in case the incoming administration disappoints in some areas while prioritizing some others. So in a sense, Arcosa is sort of like a Jacobs engineering type of trade where the company is diversified rather than only specializing in one field. Specifically, this company serves 3 different industries. So the first segment is shipping, which is a very hot industry currently because if you notice, there's a massive shortage of both marine transportation equipment as well as containers right now. Secondly, the company is also in the business of electric utilities. That's for wind and conventional. There's a chance that both of these could end up being beneficiaries of infrastructure spending. And then finally, we have a more of the traditional construction exposure, where they're providing the basic and secondary materials that are used in building anything from roads to bridges, as well as residential, commercial, and industrial buildings. So this company is extremely diversified in terms of infrastructure and markets, and we'll be covering the company in more detail during the actual JaguarMedia presentation.
Excellent stuff. I actually love this play, and I'm looking forward to doing that more extended presentation with you separately, just specifically for this company and JaguarMedia. I have to say that some of the end markets that this company serve are not only just basically beneficiaries of any kind of stimulus package on the Buy America, Build America theme that we have laid out many times, the infrastructure, the construction and such, but it's more so also focused on the green energy side. So this is potentially beneficiary of continued flow from the ESG tailwind as well. Really good looking chart over here, setting up for a technical breakout after 2 months of consolidation. Was trying pretty strong yesterday. Let's see if we get some nice follow through today. When do you want to do this presentation? Next week?
I'm trying to get it done this week, but if not, then next week.
It's a very light week, so let's see how it goes. If we can get it done before New Year, otherwise we'll just do it early next week. All right, let's try Jay one more time. Jay, are you there?
Hey, Fahad.
All right, good.
All right, sorry about that. All right, so on my watch list is a company called Compass Diversified Holdings. Ticker is CODI. This is a private equity firm essentially that specializes in add-on acquisitions, buyouts, late stage and middle market investments. As of right now, its portfolio consists of 10 different companies. 6 of them are in the consumer industry, such as Marucci, Ergo Baby, Liberty Safe, Velocity Outdoor, BOA, and 511 Tactical. 4 of them are in the industrial industry. Advanced Circuits, Arnold Magnetic, Sterno, and Foam Fabricators. And just a fun fact, when looking at their timeline, their history, the most notable acquisition that they did was Fox Factory Holdings back in 2008. They then started to divest these shares in 2013, and I believe got rid of all their shares in 2017. Now, a couple weeks ago, the company hosted an investor day where management said they expect to be at the upper end of 2020 revenue guidance of 270 million to 280 million. And a lot of that has to do with the fact that more than half of its businesses have been or are benefiting from the growth of outdoor recreation. So again, Velocity Outdoor, Marucci, 511 Tactical, and the recently acquired BOA Technologies. Collectively, revenues for these businesses rose about 20% in the September quarter. Now, there are 2 companies to just keep an eye on. Number one is BOA Technologies. This company created the BOA lacing system, where essentially classic shoelaces are replaced by stainless steel wires connected to a turning knob. This knob is then used to tighten, loosen, and snap your laces into place. The CEO of BOA Technologies outlined its long-term opportunities at the Investor Day. Right now, it has about $100 million in revenue, and the roadmap for them is to get to 500 million. And this is primarily driven by the adoption of the BOA Fit system. Management believes that it has the opportunity to capture 65% market share of the snowboard, cycling, golf verticals, and then 10% share in the workwear, outdoor, and medical vertical. And then the second company to keep an eye on is Foam Fabricators. They are a leader
Hold
in
hold on a second. BOA, what is the symbol for that would be BOAC? Am I right?
I don't believe so. I think it's a privately held company.
It's a privately held company. Okay, but
Yeah.
the connection we're making here is really basically for CODI, which is the Compass
Correct.
Diversified, that is providing the material that goes into making of these, right?
They basically own the company.
Oh, I see. Okay,
They
great.
have a stake in the company.
Okay, this is some
Yeah.
interesting stuff. I may get one of these. All right, and the next one you had?
Yeah, so Foam Fabricators, they are a leader in molded foam protective packaging. The catalyst here is that this company is going to participate in Project Warp Speed by providing solutions to help with vaccine distribution. Management believes this solution could be an 8-figure contribution to revenues. And for perspective, in 2019, the company did $121 million. And then lastly, William Blair was out with a note after this investor day highlighting that there continues to be this opportunity where management is evaluating whether to switch from a partnership structure to a C Corp structure. Other companies have done this in the past. For example, Blackstone, they did this in 2019. William Blair believes converting to a C Corp would help expand institutional ownership and could allow for inclusion in different indexes. And finally, while they acknowledge the uncertainties associated with converting to a C Corp, they believe it would be well received by investors.
Very interesting. The brands that this company owns, CODI or Compass Diversified, that would include Velocity Outdoor, the Ergo Baby Carrier, Liberty Safe and Security brands. I think I've come across some of these brands in the past. FFI, Compass, Stermo Group, Marucci Sports, and a few others.
Yep.
Interesting company. Fun one to talk about and to research further. Definitely in a lot of high growth segments, particularly with the outdoor doing quite well. So one to watch. The stock has recently pulled back from about 2180 down to 1934 in the last couple of days. See how it reacts. A small cap, $1.2 billion in market capitalization with a revenue base of $1.5 billion that is growing mid to high single digits overall, but within its categories, some of these categories, high growth categories like this one, is actually becoming a bigger and bigger piece of total pie. So revenue mix is also shifting, and stock seems to be on a higher low, higher highs and higher lows. The trend is basically slowly improving. So I'll be watching this one closely. Could be a runner in 2021 sometime. So good stuff, fantastic. Hey, Chronicle, let me know when your presentation is ready to go, and we can jump on that anytime you like. All right, folks,
Sure.
we're going to stop over here. Thank you very much, and we'll see you in the chat room shortly.